Hi traders, it's Amelia Bordeaux here from Market Compass. It's a Friday. I thought we'd go around the markets and take a look at what's happening, kind of reset ourselves for the rest of the day and to start off next week also, which starts Sunday night Asia time. I'm based on the East Coast of the United States, so for me at least, markets open Sunday night Eastern Standard Time. Let's look at what's going on. Here we have the red and the green line is the US dollar index. And the purple line is the Dow Jones Industrial Average. So this horizontal green line is at 100. That was the key level for the US dollar index. And earlier, late last week, early this week, it busted right through. The dollar got really, really strong as the coronavirus was spreading rapidly throughout the United States. And so the dollar is a safe haven. And safe haven strength came into play. At the same time, equities were still falling really heavily. Then we got the $2 trillion fiscal package, at least passed by the Senate in the United States. And so equities did rally off that for 3 days. They're down today. And as equities rallied here, that's the Dow in the purple, you see here there was some relief and the dollar started to weaken pretty rapidly. Yesterday was the 25th of March. So you see, I'm just going to put the cursor there. And that's when we got that really bad initial claims read of 3.28 million people last week in the United States. The number was for last week, filing for unemployment benefits. And so that did weigh on the dollar at the time. So a lot of G10 currencies are being moved around solely by the dollar. The dollar is such a powerful force in times of enormous market stress that movements in the dollar tend to move all G10 pairs. Okay, so just keep that in mind. You see we've backed off that high of 102 spot 93. We're down below 100 again. This is unprecedented moves in the US dollar. It's just kind of whipping around. And it's not too surprising. As I said, we did get the bad news on the economic front yesterday with the jobless claims, plus equities were up. So kind of the dollar's falling, I believe, reflecting the bad economic news, some relief that equities are rallying, so not as much need for a safe haven there. And then now equities are down today. And I think people are just selling off before the weekend. Shorter term traders are just selling off, not wanting to hold those positions into the weekend. I also think that we know certainly that there'll be more bad news coming on the employment front here in the United States with the payroll number and also next week's weekly jobless claims. So we're not certainly out of the woods. The worst economic data is to come, and the markets know that. So in terms of picking an equity bottom, I don't think that the bottom that we saw is the actual bottom. I think we could go lower. Let's look at the volatility. Let's see what the VIX Index is doing. If you're on my monthly conference calls, my Global Macro Event Risk webinar, you hear me talk about this. So let's just check in. This is the VIX Index. It's a measure of volatility in the S&P 500. It's still high, okay? So it's come down off its peak from this 82 area here. We're still holding above 60. We're at 65, spot 21 right now. You can see this horizontal blue line. That's when January 23rd, that's when we started to hear about the coronavirus. I chose that date off the World Health Organization website, the first reported cases that they listed there. And so post that, about a week post that, volatility just exploded. And that's when equities in the US started to fall. And I use the term exploded because 20 is the level that generally, when I was on the trading floor sitting with all the traders at the big banks, 20 is the level that traders start to think the market gets, all right, pretty hairy, pretty tough. We're obviously well above that level, really volatile. And so it's not too surprising to me that we did see that rally in equities, which I think unfortunately will be a bit temporary because volatility did come down. And I do think anytime you see volatility fall in the VIX Index, that means that equities are probably going to recover around that period, at least slightly. But it probably, to me, means that this is not the bottom in equities. I get this question a lot. And the reason why is because the VIX is still elevated. So we're still above 60. We're at 65 here. That's really volatile markets, really volatile. So if you buy equities, just know that you're still in for a roller coaster ride. And if you're picking up equities, you should be picking them up for a long term, 5 to 10 years, not, 5 weeks or something. Let's just take a look at a comparison chart. I'm just comparing the VIX, the volatility in the S&P 500 to the actual S&P 500 index. And this is what I was talking about. You get that huge run up, the spike in volatility, S&P's falls. You get kind of a commensurate receding in the volatility, and S&P 500 rises. You can see we're ticking back up today and equities are falling again. So I just want you to keep that relationship in mind. I'm just going to look at our other safe haven currency, the Japanese yen. This is against the S&P 500, this chart. You see here the green and red line is the yen. Dollar was rallying, the US dollar was rallying quite strongly until we got that jobless claims number yesterday. And then the dollar turned, as I showed you on the first chart at weekend. And so dollar yen is strengthening. And that kind of makes sense as now US equities back off. We have a loss today in equities and yen is strengthening. But really, this is all a dollar move largely. If I show you here, the Canadian dollar, we're sitting around an important level, an important support, 140, the figure. Again, we had a high of 145. The dollar was really strong. Dollar Canada got to 145. And when the dollar weakened, we're down again. And the Canadian dollar is strengthening. It's not a lot on the Canada side. This is all a US dollar move. Why? Earlier this morning, the Bank of Canada cut its policy rate 50 basis points due to the impact of coronavirus, bringing its rate down to 25 basis points, its policy rate. Also, we have oil prices continuing in their free fall. So we don't have any good economic news for the Canadian economy, which would translate into strength for the Canadian dollar. So what we're seeing here is all a US dollar move. One of the currencies that's benefited from the fall in the US dollar is the Australian dollar. It got to a low of spot 57.41 you see here, and I'm just going to back out the time frame to maybe a year. It really, really had a massively sharp decline. If you saw me on Pure Exposure Growth Series a week ago, this is one of the Aussie, the A6 contract or the 6A contract in futures. I put a trade on there. And it did really well. I shorted the Aussie futures contract. And so it's backing up now. This is purely a dollar move, as I said. But, when these currencies back up like this, I think it's a good time to investigate levels that you can re-enter shorts on. But we just got to keep watching the US dollar and what US equities do, which is driving to some extent what the US dollar is doing. Let's take a look at a couple of headlines from around the world and see what's going on. If we're just looking at news out of the United Kingdom today, very unfortunate. This is the BBC website. UK Prime Minister Boris Johnson and apparently now the Health Secretary have tested positive for mild cases of coronavirus. Really unfortunate. The UK economy, having followed on from the whole Brexit ordeal, is going through a really rough patch, and they need to straighten out a trade agreement with the EU, which has been put on hold because every country is, fighting the coronavirus clearly, but they weren't in a strong position heading into this global pandemic. And so, unfortunately, as an economy, the UK is really on its back foot. You can see here the pound versus the dollar and the huge bounce back that's occurred with the pound strengthening. And once again, it's just a dollar weakening move. It's a US dollar moving all of this. There certainly hasn't been any good news out of the UK, which would drive pound strength. So you can find me, www.marketcompassllc.com. If you go to the webinar tab, you can learn more about and subscribe to my global event risk webinar, which is held monthly. I give trade ideas and go over event risk and volatility in the market, so you can either trade it as an opportunity or stay away from it if it's too challenging, and depending on what you already have on in your portfolio. Let me know what you'd like to see. Would you like to see a weekly newsletter on what happened in the markets and why, or would that not be useful to you? Do you want more of a news roundup on what's going on around the world? Let me know how I can be of help. Once again, you can follow me on Instagram, Market Compass, at Amelia Bordeaux, Twitter, and www.marketcompassllc.com. Thank you.